a lot of the guys learning cup and handle or head and shoulders pattern on the chart. But if it's not the right asset to trade on, it doesn't matter what you're seeing on the chart.
Absolutely. And the other thing to keep in mind is we're human beings. We're not machines, right? So we have a lot of confirmation bias. Phrase I love to say is, when all you have is a hammer, everything looks like a nail. So if, you're just a one-trick pony as far as what you're looking at on charts and patterns, you got to be careful because you might start to see things that aren't actually there to other traders' eyes that could get you in a little bit of trouble. When you can see patterns play out on multiple time frames, whether you're an intraday trader or a swing trader, you see it on a 2-minute chart or a 1-minute chart and a 3-minute chart and a 5-minute chart playing out like that. It just gives you that much more fuel for what you're looking at, and that starts to be able to take away some of that confirmation bias.
Yeah, 100%. I agree. So basically, you're saying multiple time frame, the right assets, so the right momentum in it. You have those stocks that no matter what you do, even if you find the best bull flag of all time, it's not going to work because it's not the right asset. The pattern is on a chart, but the asset doesn't have any news involved. So no one actually is looking at it, or no one wants to push that. Those kind of elements of news or any type of momentum that will drive more eyes or more algos to that symbol, that will create those patterns that will actually eventually will work.
You hit the word actually that was in my mind was momentum, right? A lot of these patterns are momentum patterns. So if there is no real interest in the stock, there's no news, there's no anything in it. And so, like you said, the momentum's not there, traders aren't there, follow through isn't there.
Exactly. So let's dive right to it, Chris. We are basically right now scanning or using 3 methods of scanning in order to find the trades or the tickers we want to trade today. So this is how we do it, guys. Pay attention to what Chris will say.
So this first scanner I'm going to talk about here is what I call my pre-market highs versus pre-market lows and volume percent today. All right. So one of the things that I have done here is I've taken what we call our volume today percent filter, and it's going to take a 10-day average of volume on a percent where 100 means the stock's done its normal volume, 200 means it's done 2 times, 300 3 times, so on and so forth. So if you've got a stock that's done 60% of its normal volume in the pre-market, that's something you're going to want to look at because it can't undo that volume. And we're not even into the regular session, and it's over half of what it would normally do in that point. And you couple that with how many shares the stock is actually traded, because if something is done 300% of its normal volume, but it's only traded 10,000 shares in the pre-market, probably not going to be much of an interest to us.
Yeah. So the first thing to remember is that we need an asset that is actually coming with some news, something that will drive the stock today, right? Up or down, doesn't matter, but something that will move it. That could be FDA approved. That could be a lawsuit. What else do we got? SEC that, investigating a new CEO or whatever, a new product, whatever it is that will bring a lot of attention to it. Because how does it work, right? Any one of us will open CNN, CNBC, whatever it is, or Bloomberg, Benzinga, Seeking Alpha, will read the news, right? The headlines. Those headlines will tell us that this is the one that we want to focus on, right? And a lot of the guys will watch that, the same thing, and usually because there is something major going on with that company. So you're getting a lot of volume right now of buyers and sellers. With that, now that you have something that will drive it, now you have volume. And the other part is to see not just the volume, but actually how it moves. So you understand that it's not just about the news and then the volume, but you actually have a movement as well. Now, when you combine those 3 elements, you got the right one you want to focus on at least on the fundamental part, let's call it that way.
So this is the homework part of it here. SBH, all right? So if we look back on SBH to close Friday, all right, it meets all the criteria that I just talked about, had a relative volume of 1.65 as it finished out the day. And then we talk about chart patterns, right? So we look at this here and these two items here, and not necessarily cup and handle-ish, but we start to look at how, we've gotten through earnings. We respected that $10 number here that I just talked about. And these are the things that I'm looking at. And if we look here, we're starting to gap up. The market is strong. We've got this area to get up above here where it's gapping up into. And if it does that, we're not saying it can or not saying it will, but there's a little bit of room up towards that $14 level. We also look at stocks have a personality, right? Not all of them, but a few of them. And we try to look at ranges and dynamics of that. We see here that this thing has some big intraday moves in the past. So we can start to set ourselves up. We could use price alerts. We could just keep a thumbnail chart, however we want to track this. But this could be a name that we want to look at going into the day, right? To kind of wrap up here on the pre-market actives, a couple other things I always like to talk about with scanning is look deeper inside the scan. Is there a theme on it? So for example, something that I'm noticing here, you got SOXL, right? Our semiconductor bulls. It's gapping up, it's moving, right? You also have TQ here, gapping up and moving. You got NVDL, which is a cheaper way, let's call it, to play NVIDIA, all right? So this is where it goes back to where you don't have to, the penny stocks are moving. Let's look a little deeper than just the penny stocks also for those of us that want to trade names that maybe they don't have the same dynamic moves, but they may be respecting some technicals that we really want to pay attention to and give us some orderly moves, something like an AMD, something like a NVIDIA. There are some other obscure, maybe not necessarily obscure, but some lesser known names that are in the semiconductor world, a Marvell, an ON, things like that. So the folks that maybe for myself, trading the penny stocks has always been very difficult. I'm very methodical. I like things to be a little more slower moving into the setups that I want to see with an EMA and a VWAP. I don't want to see things that are whipping all over the place. They start to get real spready on me. So these are the kind of deeper dives that I like to look at. And when you start to see a common theme of some of these items that are in here like that, I think it's very, very important to look at those.
So what I love about what you're doing, Chris, is, because I'm on my side, at least, there were times where I traded stocks in play and look for the gappers on pre-market scanners and such, and times where I focused on the big tech. What I really love, and also times when I did what you do, and what I love about it is that you can prepare yourself many hours before the opening bell, basically, right? So you can do that at the end of each day. Go and scan for those stocks that pushed on the daily, like you just mentioned, closer to the consolidated and closer to the EMA and other parameters that you might use. But the idea is that on the technical level, if you can prepare yourself in advance, you're already ahead of the game because you already know what you're planning to do and you found the right asset to trade on. So this is crucial, guys. Don't just go and find just random stocks, but actually prepare yourself to trade the right asset.
Well, and prepared is such a good word because in everything in life, you hear chance favors the prepared mind, right? And so instead of however you're scanning, you're looking for stocks, and things are moving and it's like, you're running around and you're all squirrely and what do I want to trade? Or, this is moving now. Oh, wait, that one's moving now. It's very easy to have your focus get taken away when you don't have a plan, right? So when you come into each day with a plan, you don't have to necessarily trade if the plan doesn't unfold the way you want it to, right? All the trader cliches, I made my most money in between the trades and the waiting, right? These are things from Peter Lynch and industry giants that were before they were industry giants. That's how they became the industry giants, right? Having that plan, whether it is looking at the most active stuff in the pre-market or it's looking at stuff that has been moving strong over whatever time frame or closing strong from a shorter time frame, all these things set us up into those moments when we can say, this has been doing these things that I'm looking for. The market is in a line with me right now. This is where chance is favoring my preparedness, right? It's so overlooked and underrated. The same as risk management. So
there are so much to cover when it comes to trading, right? Especially when talking about scanning and finding the right asset.